Hello everyone, John Hyaden here with another daily revision. Let us begin. Before we start, I suggest like always you read the general risk warning by stopping the video. Upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. Today's focus will be on the US economy. The Fed members keep speaking, each one in his turn, on the possible rate hike next month. These reports are very important not only for the short-term volatility that can of course create great trading opportunities, but it can also give us hints on what should happen in the next Fed's monetary meeting. I remind you about the short-term trades. Every announcement with two bulls importance, as you can see here, there are importance rate. 2 or 3 bulls will create high volatility. They also create trading opportunities since 5 minutes after the report, the market reacts to the results no matter what the main trend is. So for example, if the initial job claims, as you can see here today, beat forecast, the dollar will get stronger, thus trading in favor with the dollar can be a great idea. I will talk later on about the crude oil inventories and how it affects our decisions in trading the crude oil for today. US market negative day in Wall Street yesterday. The S&P 500 and the Dow Jones went down by 0.32%, as every investor now asks himself whether he should keep trading with the upward rally or maybe it is a good time to sell for relatively high price, as confusion over interest rate decision keeps worrying traders around the world. Mario Draghi, the president of the European Central Bank, disappointed investors yesterday as not even a single hint on the possible increase of quantitative easing in Europe was mentioned in his speech. Using the technical analysis, we can see the market is facing difficulty in choosing direction. It is not the ideal condition to trade. However, since the strong feeling now among traders is that we should see higher interest rate, make analysts predict the market will go down. Thus, trading in favor with the seller will be more educated than with the buyers. As you can see below, this is the S&P 500 daily chart, and we see a start of maybe a possible downtrend here after we stopped on the last resistance. Commodities, gold standing still in the last few days after I remind you that we saw a major downward rally for almost 1 month, reaching the 3-month low already. The gold is now showing signs of sideways until things will get clearer, since from one aspect the interest rate concern made the commodity to drop. However, China's poor reports hint on possible intervention from China to stimulate the economy, or in other words, greater chances for the gold to recover. Using technical analysis approach, we can see if the gold will break the last small support area at 1084. We should see a downward trend continuation. Crude oil, last chance for the commodity to recover after we reached almost 2 months low in today's early session. Due to traders' concern, it will take much longer for the global supply and demand to rebalance. In early revision, I mentioned that if we break the $44 per barrel, the drop downward will be much more significant. Guess what? We are now exactly at the crucial point. The commodity should set its direction, and it will happen after the crude oil inventories report, which is taking place today at 4 p.m. GMT. Look for the results, as forecast is lower than the previous one. So in other words, poor report will mean less supply and higher prices for oil, which will create a very good possibility for call option and an overall recover of the commodity. Forex. UK unemployment rate fell yesterday to its lowest level since 2008, standing now on 5.3%. Just for your understanding, the US rate is now 5%. And the overall European rate is over than 10%, which leaves UK in a very good position next to our neighbors. Good reports like this make the pound go stronger and create great opportunities to trade the pound in favor with the buyers. As you can see below, this is the pound dollar daily chart, and due to yesterday's good reports, we recovered from these huge drops that actually broke the last support area, but who knows, maybe from here we will recover and we reach this next resistant trend line. So keep a close eye on the pound dollar. That's it for today. If you guys have any question, please contact me on binaryoptionsreview@gmail.com. And of course, visit Ken Davis' blog at binaryoptionsreviews.net. That's it. See you again tomorrow.